Okay, so on Tuesday, right, we pretty much had already reviewed everything. We understood, right, what this meant in terms of order flow, in terms of structure, and pretty much how we could dictate this movement to give us a future movement. And the only issue that we had come across, let me see if I remember what time frame it was. Yeah, it was here. Was we had the disruption in play, which is why we had the structural range in play, hence why we had this POI marked out, and that's pretty much what played out. But the reason why this POI, this reaction worked, right, was because of unwillingness, because of the disruption, right? And even though we had a mitigation to the upside, right, that does not mean that this is solely bullish because of the reaction based on a POI. All this is giving me is that there is internal bullish order flow that gives us the pullback or the retracement or even the impulse. That's the whole point of order flow. But depending on how structure is, right, that's how we determine whether or not it is essentially worth going with bullish order flow or bearish order flow. It really just depends on your overall analysis of structure, right? Not necessarily volume. Volume would be more so to read effort, but effort could be misleading. So in summary, right, we have a structural range, the reaction occurred, and it gave us a brand new low. So because they gave us a brand new low, we have now solidified a directional bias here. Right, so we have, right, the unwillingness that was based on an inefficiency fill, which created a new low. That is bearish order flow. And because we have such a very strong move to the downside, inefficiency is left behind. That is now efficient, and we have now mitigated to create a new low. This is also bearish order flow. So now we reacted from the POI, right? This is already another disruption, right? But in order for us to get a disruption, we need bearish volume. So now I want to not anticipate, but I want to see what happens in terms of a structural basis. Not to mention, this is the pretty much the primary, for the very first POI I'm looking at, but there's also, of course, an inefficiency in play. Right, so now I need some type of reaction, because although this may not be reacting here, this may not be reacting from something, I'm noting this, which is a very strong move to the upside, very strong momentum, right? So in order for the momentum to be negated, right, I need internal breaks of structure, internal order flow disruptions, internal liquidity grabs. I need something to justify the continuation. Without that, it's hard to make a judgment. So because today, Friday, was very, very strong, that doesn't mean much to me in terms of an overall scale, because yes, you could say that we are reacting from here now. Bearish wick that led to the overall corrective movement, right? Not this wick, this wick. That has been essentially pushing price up, although it has been high effort, low result. That's essentially the cause of why this entire week we were bearish. So I'm looking more so at the weekly closure, because this weekly closure is giving me signs of a reversal pattern. Why? Because we had already tried to react once, which originally, let me find it, which originally was a reaction based on that. That caused the reaction, but that was not sufficient enough to give us a bearish delivery. So as a result, liquidity has been taken. We had the internal breaks of structure, and we have now had that bearish move into the downside. But like I said, right, because this is such a big move, it's going to take time for it to fully transition, which is why a lot of my focus, especially on the last Zoom call, was on this H4, H2, H1, my major intraday, my minor intraday, right? My scalp, I would only rely on that for my entry. And because of that, we essentially had this reaction, which is essentially the move of the week. So as of now, right, the first thing I want to look at, I'm gonna let Monday play out. That's fine with me. I'm gonna let Monday play out, unless I see something extremely clear. But either way, just because you see something extremely clear does not mean it's gonna sustain itself. And I'm gonna show you an example with what I mean, and that would be AU, right? So with AU this week, let's actually read this from a structure perspective. So we know, right, we had already pointed out that we are bearish in terms of a structural range. But once we start reading internal structure, that's when we started to essentially try to predict any type of bullish scenario. And well, in terms of ignoring all of this, all I care about is the fact that we did that, and that. Why? Because if you go to H2, this move to the downside at the time is a bearish break of structure, which is in alignment with the continuation to the downside, blah blah blah. So because I note this reaction that gives us a push down, you could see this high to this low, that was not sustainable because we had broken an immediate structure first, and that had caused an internal liquidity grab. But because this is an internal liquidity grab and we have not created a new high or a new low, it's unwillingness, so it's a lot harder for me to try to justify what's happening here. So I'd rather let it show its hand. So now is when I can focus here. So because I am acknowledging the full break, that shows a full liquidity grab, that shows this as a solidified low based on high low retracement, unwillingness, break of structure potentially, right? But that has to create new highs in order for it to sustain itself. So as you can see, there's the M15 POI that I essentially played off of, and I tried to play the continuation because this here is a turbulence point. That is a turbulence point. The turbulence point, right, created this new high, which solidified the overall liquidity grab with the internal liquidity grab, right, to make that one. And so now I have the reaction based on the POI. Wait, so 30-second isn't the best. Okay, so as soon as I saw this, the first thing I see based on the reaction, right, is the fact that we are high, low, high, low, high, unwillingness, internal disruption into my POI. You know, I always reference the open and the low. So my parameter is this. Very aggressive, right? But preferably from a conservative standpoint, SL should be below that wick, which is a 2.3. But anyways, right, I am not going to break even just because we break this high. I'm going to break even now when the solidified high has been taken out, right? Because this is a solidified high, then we have low, high, low, and internal structure. So right? As soon as we break this, I am now break even, which is why this did not phase me. My risk is still the same. All I had to do was wait, what, an extra 3 minutes, or like 3 minutes? You see what I mean? Just to have that entry solidified. So because the entry is now solidified, based on the solidified high being taken, that does not mean I'm break even now. Because we have taken this out, right? Obviously my target is up there, right? So because essentially we have not created any structural range, the invalidation point is here, the solidified low. So my SL now moves from the 1.5 into basically the 0.8. So my risk is now cut in half, right? But I am still here with the potential of reaching that original RR, which is in a first target is a 1 to 13, which is the first target, intraday target here, and and then obviously there's liquidity sitting here. So that played out. I'm going to take this off. That played out into the liquidity, into what, a 1 to 15? Yeah, 1 to 15, right? So partials are secured. The position is now running. Unfortunately, right, this is now, at the time, I could confidently say this is bullish. At the moment, we take this high out because this is now bullish structure, right? And we now have in harmony bullish structure. So I can confidently say we should be taking this out unless something happens, we have a transition. So because a transition can happen at any time, right? Just like as you can see, this is just the pullback, right, of this overall leg because we are bullish. So this came into a deep retracement, even broke the preliminary level of structure, right? Unfortunately, I'm not looking at the charts now at this point. This is like when I'm, doing other stuff with my day. But unfortunately, this is what leads, right, a potential POI here, and then it's met again, and it is not broken, as you can see. This now creates a bearish structural leg, and that's what causes the break even and a whole ton of mess. So because my original invalidation, now we have a disruption. So because the disruption is now in play, my entire bias is now a bit shaky, because now we could be looking at a type of variant that essentially is presented as a type of redistribution. And because that is now in play, if we have the reaction here, right, and then that continues to break and give me a bearish structural range, right, you now have the reasoning to want to continue lower. Why? Because we have shown a sign of optimism, and the sign of optimism has now been taken. So this is now in harmony with the overall structure. And now, but my issue with that is look at how overextended this is. You see, this is super overextended. So I need something extremely clear. I need a very clear structural range, a very clear liquidity grab, a bearish liquidity grab for me to continue this lower. Because if this is a redistribution, and let's say we do create a bullish reaction and then create a new structural range here, which now takes structure, okay, this is now a high probability swing trade. Excuse me. That is now a high probability swing trade because we have a newly formed liquidity grab, bearish liquidity grab. We now have a bearish structural range. We now have a bearish retracement or bullish retracement into a bearish continuation. And that as a whole is a redistribution. But I cannot call it that until it occurs. But if I let it occur, I will miss the trade. So that's why I'm saying order flow comes over everything. Order flow, structure, blah, 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 etc., etc. So yeah, I cannot really give a bias now, but if it was up to me, this probably is going to continue lower. And that's why I don't like reversal chasing unless I'm still in from up here, right? Because I'm still have my bearish position running. That justifies me wanting to hedge. But if the hedge fails and I can catch a continuation, then I'm going to win regardless in terms of overall, right? So I'm willing to take that hedge loss if I solidify the direction, right? Which is why I'm always on about direction bias comes first. So that settles that. EU, okay, this was the interesting one because we have now, this is the first thing I know. We've now taken out a very, 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 very strong structural range, which is to the downside. And that has generated bullish flow. So bullish order flow was currently in play to take that high out. But because this has now created a type of liquidity grab, right? Push up, push down, right? We have bearish order flow in play internally. So realistically, that makes a lot of sense. Now, because that makes a lot of sense, this is still considered, this is considered counter trend in terms of the current structure, but as a whole, this is still bearish, right? As a whole, right? Even if we've taken preliminary structure out, I cannot justify this as bullishness because this could be a liquidity grab as a whole. So this one's tricky because this gave a lot, right, of bullishness, and we even cleared out liquidity right before we did it. So this move made a lot of sense after the liquidity was taken, and that's what created a bullish structural range. So here's my issue, is the fact that we have a solidified low or a solidified high based on this low that now causes a break of structure, but the break of structure leads to a bullish liquidity grab. So that gives me a bearish narrative, which is why I'm saying this entire scenario here. So the bearish narrative is in play, right? And it makes a lot more sense because the liquidity grab is in alignment with it. The overall direction is still bearish, right? And even though in DXY, the picture, right, like I said, there's strong momentum, which is the same thing here. Solidified low was taken out, break of structure, then caused a liquidity grab. We need a strong reaction here. We need a reason there to justify a continuation to the downside. Same thing here. You need a justification, whether it's down here, for it to continue higher. But for the meantime, you are technically bearish in terms of intraday. And that's pretty much, you know, where we are today, which is why I like to sit out Mondays. I'd rather see price action for what it is, let it print a picture for me, and give me a bias for the week. Right, so GU, same thing here. Exact same thing. Right, we have already dictated a bullish narrative based on the liquidity grab to the upside. But now is when we read internal structure. We know the directional bias is up, but we have low, high, low, high, low, high, low, high, low, high, low. Liquidity grab, bearish structure. So this POI does not make sense to me because we are bearish now. So I could see this, right? If we do get this reaction, I probably won't take it. But if that is missed, that is now a disruption. So if I'm wanting to take, let's say, a trade here or here, preferably down here, right? Lower the better. I need the reaction for me to justify bullishness. Right? So just because a trend is bullish does not mean the order flow is bullish. Why? Because you need bearish order flow to get a bearish pullback and vice versa. So I'm now trying to essentially see where we will bounce from, because just like this, just like DXY, this is getting a strong weekly closure, which is dictating a very strong bullish reaction. So the lower the better. So best case, we actually meet inefficiency, and that's when we rock it, because I am bullish on this medium term, long term, until we clear this. So right, like I said, the lower the better, right? We could meet the weekly inefficiency because the bearish flow is now in play, but the transition of bearish to bullish is now what's going to be in alignment with the overall narrative, the overall direction, which will create a new high, and that creates a very good swing trade, which would be easily 500, 600 pips. But yeah, this is printing out a very good narrative for the bigger picture. Now it's just a matter of getting the timing and the entry right. But yeah, that pretty much will conclude today's little lecture. I felt like it was long, but it's only been 20 minutes. So yeah, do you guys have any questions? I really need to get better at these sketches though, if I'm being honest. But cool, does anybody have any questions? Can you look at EG? Nah, I don't trade EG anymore, bro. Just looking at that actually is, I think that's in pretty sloppy, isn't it? Oh my gosh. Yeah, nah. Nah, man. No wonder I haven't been asked about this in a couple weeks. That's just why. Yeah, bro, what is this? I mean, I would be bearish on this if I had to just look at this. I would definitely say I'm bullish on this. I mean bullish, I'm sorry, bearish. Because let's see. This is what matters to me. Bullish inefficiency causes a reaction. If you look at internal structure, that created that, right? And as you can see, I'm pretty sure we can do the same thing that we did with our other pairs here. Is low, high, low, high, low, high, low, and willingness, break of structure, right? But this has now taken out the preliminary full leg, and this full leg has now created bearish structural ranges. That's why I'm bearish on it, just off the bat, just looking at it. Yeah, let's see if this breaks scalp structure. This one is sloppy too. Yeah, you see, stuck in the range. But yeah, does anybody have any questions? Cool, so we can end it off here. All right then, guys, I'll see y'all on Tuesday.